Cheers, how you doing? And welcome back to the channel. In today's video, we're gonna look at gold and silver and the outlook for the week ahead. We do this every week, so if you like the content, if you like the analysis, make sure you hit that like button. If you're not subscribed to the channel, hit that subscribe button down below. All right, let's get into the video. So at the time of filming, we've actually just had a decent push up in gold, roughly around those moving averages, a bit of volume coming in on US Open. Now, gold's been in a little bit of a rangy environment over the past couple of days. Right, we did try and potentially break out to the upside here, slight fake, we've come back down, and now we are testing this area again. So the last 2 weeks, or the first 2 weeks I did this video, we were looking at gold and silver shorts. Last week, there was more of an argument for gold longs. This week, that argument still remains. So looking at the charts right now, I would be more bullish on gold than bearish, which is quite strange because the DXY, the dollar is pushing up and we're getting that gold rise as well. You normally expect that inverse relationship between gold and the US dollar. But if we see a breakthrough of this area and a break and close, unlike we had last time, it could be a decent move. It could be a decent entry for upside movement in gold. This is 4 hours, certainly bullish. There's no doubt about it. It's a nice bullish candle, but we've not broken the area yet. It is counter trend. It still is counter trend going long on gold. We still have this 200 to contend with, which we've rejected a few times in the past. However, if we come out on the daily, again, we have not broken this downtrend swing, so we are on that downtrend. We had a decent bearish bar here, a big hammer candle on that 20 period. We thought at that point in time, this may continue to the downside. However, buyers are now coming back in. So we have mixed messages here on gold. I don't think the charts are very nice. I don't think there's great market context here to be able to accurately give a proper bias in gold. However, it seems to be market is getting support roughly around that 1750 level, I believe, and tagging off that area, buyers coming in time and time again, sellers failing to push underneath that 1750 level, and judging by that 4 hour bar, potentially buyers are taking control. So for my bias, wait for a break of this area. I would think added confirmation, because our 200 is here, is potentially a breakout, fill those 200 orders, retest to go to the upside. I think that would be the safest bet for gold longs. Now, the other option here is we are simply retracing into roughly that Fibonacci area, 50%, 38.2, 61.8, etc., from this bar to the downside, or this hammer bar. So that could still be on the option. Again, it is downtrending. We have to remember the path of least resistance is to the downside. I think my personal bias would be gold longs. Just wait again for that confirmation and probably a breakout retest to be safe. Now, silver is similar. I think the chart on silver looks a little bit nicer. We still had that fake out to the upside, similar as we did on gold. However, price action coming back in looks a bit nicer than it does with gold. A really nice 4 hour hammer, roughly around that 20. If we can get some momentum from here, push on, potentially retest to move to the upside. Again, very similar to gold, this would look good. We still have this 200 as an area of dynamic resistance. We still have that daily hammer that we have not broken out of. I think a break above this wick on this daily hammer would be a good sign, and obviously that would be a break above this resistance area. But the fact is that this price action here is slightly different from all the correctives and impulses we've had in the past, over the past couple of weeks, which is why the bias is slightly shifted. So in terms of silver, again, I would say the same thing as gold. A breakout retest would probably be the safest option, or a break above this 200. Wait for that confirmation of breaks of structure to get in on potential silver longs, in my personal opinion. So possibly a break above this area. A break above this area here would be a break above the 200 as well. And a breaking close on this 4 hour chart, that's important to wait for the closure, would probably be your safest entry into silver. So because of the price action we're getting in gold and silver, I think my bias, as long as we get confirmation of breaks and closes above those key areas, would be movement to the upside. I think possibly Sellers are getting exhausted. There's that lack of momentum to the downside, and we're seeing buying pressure come into those commodities. So I'd wait for that confirmation because we still are downtrending. Within Dow theory, we are in that downtrending environment. But if you get that confirmation of breaks of structures and breaks and closes, I think playing those commodities at the upside wouldn't be a bad play. Thanks everyone. If you enjoyed the video, make sure you hit the like button. If you haven't subscribed, hit subscribe. And also if you want more analysis on gold and silver, A1 Trading have a free Telegram. The link for that is in the description below. Cheers guys, I'll see you next week and trade safe. Peace.
What's up guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.